1.1 Basics. Business is an economic activity undertaken with the motive of earning profits and to maximize the wealth for the owners. Business cannot run in isolation. Largely, the business activity is carried out by people coming together with a purpose to serve a common cause. This team is often referred to as an organization, which could be in different forms such as sole proprietorship, partnership, body corporate etc. The rules of business are based on general principles of trade, social values, and statutory framework encompassing national or international boundaries. While these variables could be different for different businesses, different countries etc., the basic purpose is to add value to a product or service to satisfy customer demand. The business activities require resources, which are limited and have multiple uses, primarily in terms of material, labor, machineries, factories and other services. The success of business depends on how efficiently and effectively these resources are managed. Therefore, there is a need to ensure that the businessman tracks the use of these resources. The resources are not free and thus one must be careful to keep an eye on cost of acquiring them as well. As the basic purpose of business is to make profit, one must keep an ongoing track of the activities undertaken in course of business. Two basic questions would have to be answered. What is the result of business operations? This will be answered by finding out whether it has made profit or loss. B. What is the position of the resources acquired and used for business purpose? How are these resources financed? Where the funds come from? The answers to these questions are to be found continuously, and the best way to find them is to record all the business activities. Recording of business activities has to be done in a scientific manner so that they reveal correct outcome. The science of bookkeeping and accounting provides an effective solution. It is a branch of social science. This study material aims at giving a platform to the students to understand basic principles and concepts, which can be applied to accurately measure performance of business. After studying the various chapters included herein, the student should be able to apply the principles, rules, conventions and practices to different business situations like trading, manufacturing or service. Over years, the art and science of accounting has evolved together with progress of trade and commerce at national and global levels. Professional accounting bodies have been doing intensive research to come up with accounting rules that will be applicable. Modern business is certainly more complex and continuous updating of these rules is required. Every stakeholder of the business is interested in a particular facet of information about the business. The art and science of accounting helps to put together these requirements of information as per universally accepted principles and also to interpret the results. It is interesting to note that each one of us has an accountant hidden in us. We do see our parents keep track of monthly expenses. We make a distinction between payment done for monthly grocery and that for buying a house or a car. We understand that while grocery is a monthly expense and buying a house is like creating a resource that has indefinite future use. The most common accounting record that each one of us knows is a bank passbook or a bank statement, which the bank maintains for us. It tracks each rupee that we deposit or withdraw from our account. When we go to supermarket to buy something, the cashier at the counter will record things we buy and give us a bill or cash memo. These are source documents prepared for the transaction between the supermarket and us. While these are simple examples, there could be more complex business activities. A good working knowledge of keeping records is therefore necessary. Professional accounting bodies all over the world have been functioning with the objective of providing this body of knowledge. These institutions are engaged in imparting training in the field of accounting. Let us start with some basic definitions, concepts, conventions and practices used in development of this art as well as science. Definitions in order to understand the subject matter with clarity. Let us study some of the definitions which depict the scope, content and purpose of accounting. The field of accounting is generally subdivided into E. Bookkeeping, B. Financial accounting, C. Cost accounting and D. Management accounting. Let us understand each of these concepts. E. Bookkeeping. The most common definition of bookkeeping as given by J.R. Butley Boy is, bookkeeping is an art of recording business transactions in a set of books. As can be seen, it is basically a record-keeping function. One must understand that not all dealings are, however, recorded. Only transactions expressed in terms of money will find place in books of accounts. These are the transactions which will ultimately result in transfer of economic value from one person to the other. Bookkeeping is a continuous activity. The records being maintained as transactions are entered into. This being a routine and repetitive work, in today's world, it is taken over by the computer systems. Many accounting packages are available to suit different business organizations. It is also referred to as a set of primary records. These records form the basis for accounting. It is an art because the record is to be kept in such a manner that it will facilitate further processing and reporting of financial information which will be useful to all stakeholders of the business. B. Financial accounting. It is commonly termed as accounting. The American Institute of Certified Public Accountants defines accounting as an art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. The first step in the cycle of accounting is to identify transactions that will find place in books of accounts. Transactions having financial impact only are to be recorded. E.g., if a businessman negotiates with the customer regarding supply of products, this will not be recorded. The negotiation is a deal which will potentially create a transaction and will have exchange of money or money's worth. But unless this transaction is finally entered into, it will not be recorded in the books of accounts. Secondly, the recording of the business transactions is done based on the golden rules of accounting, which are explained later, in a systematic manner. Transactions of similar nature are grouped together and recorded accordingly, e.g. sales transactions, purchase transactions, cash transactions etc. One has to interpret the transaction and then apply the relevant golden rule to make a correct entry thereof. Thirdly, as the transactions increase in number, it will be difficult to understand the combined effect of the same by referring to individual records. Hence, the art of accounting also involves the step of summarizing them. With the aid of computers, this task is simplified in today's accounting world. The summarization will help users of the business information to understand and interpret business results. Lastly, the accounting process provides the users with statements which will describe what has happened to the business. Remember the two basic questions we talked about. One to know whether business has made profit or loss, and the other to know the position of resources that are used by the business. It can be noted that although accounting is often referred to as an art, it is a science also. This is because it is based on universally applicable set of rules. However, it is not a pure science as there is a possibility of different interpretation. C. Cost accounting. According to the Chartered Institute of Management Accountants, CIMA, cost accountancy is defined as application of costing and cost accounting principles, methods and techniques to the science, art and practice of cost control and the ascertainment of profitability, as well as the presentation of information for the purpose of managerial decision making. It is a branch of accounting dealing with the classification, recording, allocation, summarization and reporting of current and prospective costs and analyzing their behaviors. Cost accounting is frequently used to facilitate internal decision-making and provides tools with which management can appraise performance and control costs of doing business. It primarily involves relating the costs to the different products produced and sold or services rendered by the business. While financial accounting deals with business transactions at a broader level, cost accounting aims at further breaking it up to the last possible level to identify costs with products and services. It uses the same financial accounting documents and records. Modern computerized accounting packages like ERP systems provide for processing financial as well as cost accounting records simultaneously. This branch of accounting deals with the process of ascertainment of costs. The concept of cost is always applied with reference to a context. Knowledge of cost concepts and their application provide a very sound platform for decision making. Cost accounting aims at equipping management with information that can be used for control on business activities. D. Management accounting. Management accounting is concerned with the use of financial and cost accounting information to managers within organizations, to provide them with the basis in making informed business decisions that would allow them to be better equipped in their management and control functions. Unlike financial accounting information, which, for public companies, is public information, management accounting information is used within an organization, typically for decision making, and is usually confidential and its access available only to a selected few. According to the Chartered Institute of Management Accountants, CIMA, management accounting is the process of identification, measurement, accumulation, analysis, preparation, interpretation and communication of information used by management to plan, evaluate and control within an entity and to assure appropriate use of and accountability for its resources. Management accounting also comprises the preparation of financial reports for non-management groups such as shareholders, creditors, regulatory authorities and tax authorities. Basically, management accounting aims to facilitate management in formulating strategies, planning and constructing business activities, making decisions, optimal use of resources, and safeguarding assets of business. These branches of accounting have evolved over years of research and are basically synchronized with the requirements of business organizations and all entities associated with them. We will now see what are they and how accounting satisfies various needs of different stakeholders.